Hey, good morning everybody. Today is Thursday, June 2nd, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Before we get started, just a note. I will be out of the office all day tomorrow. I won't be doing a video or a newsletter update. I will see you again on Monday. Okay, let's get started this morning with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 16 came from the biotech industry. 10 came from application software. 8 came from semiconductor devices, 6 came from infrastructure software, and rounding out the top 5 we had mass merchants, specialty pharmaceutical, and midstream oil and gas, all with 5 stocks each in the top 100 most powerful stocks in the most powerful industry groups. These may be good places to look for market leadership going forward here. Let's get started today by taking a look at the Russell 2000. As I've been saying for quite a while, I believe that the Russell 2000 is the key to the market going forward here. Yesterday, the Russell took out resistance here in the 1156 area. That resistance came from this prior high back in April. And we closed near the top of the daily trading range. That's a little bit more encouraging to the bulls. We'll see if we can hold this 1156 area. If we can hold that area, the next significant area of resistance for the Russell is the 1205 range. The fact that the Russell broke out of this resistance area I think is bullish for the rest of the indices that we follow. But it's only bullish as, like I said, we can hold this area of support. Let's take a look at the Nasdaq Composite. But before we do that, stocks, after opening moderately lower Wednesday, turned higher, closing near their highs for the day on above average but lower than the prior day's trading volume. Bulls will appreciate the intraday reversal as indices closed near their highs for the day, and while volume was below Tuesday's levels, it was above average. All in all, it was a good day for the bulls. The Nasdaq closed above what's been stubborn resistance in the 4900 area and appears to be poised to make an assault on its April 19th high in the 4969 range. Meanwhile, the S&P 500 is struggling with resistance in the 2100 area. Distribution or professional selling, so much of a concern 2 weeks ago, has fallen to a much more manageable level. Currently, both the Nasdaq and the S&P have only 5 sessions each in the past month, and we haven't added a distribution day in nearly 2 weeks. Further, both are poised to lose 2 distribution days over the weekend. In light of the recent market strength and the aging distribution, the Investors.com market outlook is a confirmed uptrend. Meanwhile, our market timing model is on our most aggressive buy rating, a margin signal. A margin signal indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. Wednesday, advancing issues topped decliners by nearly 2 to 1. New highs continue to handily outperform new lows. According to our Ramosi ratio, small capitalization stocks bettered large and continue to outperform on a 10-day moving average basis. Bulls prefer to see small caps outperform. Our Ramosi swing timing model is indicating an overbought condition in the market, but keep in mind, an overbought market can become severely overbought. It appears the market sorted itself out in favor of the bulls, and while both the Nasdaq and the S&P may struggle with resistance in this area, both have decisively broken out of their short-term downtrends. Our distribution count is no longer a concern. Our market timing model is on our most aggressive buy signal. Traders may want to be working toward fully invested, but as always, keep your stops current and in place. Okay, Yesterday, the Nasdaq Composite, after opening moderately lower, closed up 4.2 points or 0.08%. We closed at 49.52. Notice how we opened lower but finished near the top of our daily trading range. That's bullish behavior for this market. Yesterday, the trading volume was above average but was below the prior day. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been since February 18th. Notice we have these 5 distribution days, which really isn't a concern because we haven't seen a distribution day in almost 2 weeks now. And these 2 distribution days are poised to fall off of our count over the weekend. Note that distribution becomes less relevant the older it gets, and so we remove distribution days from our count when they become over a month old. Right now, the Nasdaq is bracketed by support down here in the 4,900 area and resistance at its April high in the 4,969 range. Also note that we have this trend line. This trend line's been stubborn resistance. This trend line goes all the way back to the beginning of the bull market back in 2009. We struggled to better our trend line back in this area, and we failed. We're coming up against the trend line again. We'll see if we can put this area behind us. If we were to break above that trend line and resistance here in the 49.69 area, the next significant area of resistance is all the way up here in the 51.64 range. Our market timing model is on a margin signal. As we noted earlier, a margin signal indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. Let's take a look at the S&P 500. After opening lower, the S&P yesterday closed up 2.37 points, or just over 0.1%. We continue to struggle with resistance in the 2100 area. We closed at 2099. Closed near the top of the daily trading range, which again, coupled with the lower open, is a bullish indication. Trading volume came in just a little bit below average and below the prior day. The S&P 500 is in a confirmed uptrend and seems to be bracketed by support down here in the 2044 area and psychological resistance in the 2000 area, more significant resistance up here in the 2116 area. Our market timing model on the S&P 500 is on a margin signal, which is our most aggressive timing signal. Before we go, I want to talk about a couple of pocket pivots. But before we do that, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria, and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted, let's get started with Smith & Wesson Holding Company. Smith & Wesson manufactures firearms, including revolvers, pistols, rifles, and firearm-related products and accessories. The stock is in this second stage base-on-base formation. Notice how we put in this base back in the January to March area. We broke above the pivot point in the 2654 area and then failed. We fell back into the second base. Again, this is a second stage base. It's a consolidation base. We have a pivot point up here in the 3044 area. Smith & Wesson gets a 64% checklist rating, and it's kind of hard to see here, but yesterday's trading volume was higher than any down day in the past 10 trading sessions. That's our definition of a pocket pivot. The fact that we broke above our 50-day moving average and we hold consistently above our 10-day simple and our 21-day exponential moving averages, which we show in green and pink respectively, makes this a good opportunity to get into Smith & Wesson significantly before the pivot area up here in the 30-44 range. This is a very aggressive entry and may be of interest only to aggressive traders. Next, let's take a look at PRA Health Sciences. PRA Health provides outsourced clinical development services to the biotech and pharmaceutical industries via 70 offices. The stock has been working on this first stage base going all the way back to January. We attempted to break out of that base, but never actually closed above the pivot point here in the 50-25 area. And we continue to work on the first stage base. PRA gets a 68% checklist rating. Notice how it's respected its 50-day moving average recently. We show the 50-day moving average in red. Yesterday we traded, again it's hard to see, but we traded higher trading volume than any down day in the past 10 trading sessions. We've respected the 50-day moving average. We continue to respect the 10-day simple moving average and the 21-day exponential moving average. This pocket pivot may give us an opportunity to jump into PRA Health Services prior to the breakout up here in the 50-25 area. Again, be careful on this entry. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.